this is Triffany Hammond. I'm a support and resistance trader. What I'm going to be talking about here is what I do in terms of drilling down from a larger context in terms of time frame down to the time frame that I like to trade. Now, I like to do this from the daily to the 4 hour to the 1 hour, but certainly the techniques I use can be from any time frame you like to trade, and then just going to put it into one and then two time frames larger than the time frame that you trade. So if you're a 5-minute trader, looking at a 15 or 30-minute time frame is going to still have the same effect. The idea is we're just making sense of price action in terms of a larger view so that we can look for the best opportunity on the time frame that we trade. Now, I am going to talk about the euro dollar. I'm probably going to beat this to death, but I think this is really important to talk about because I know a lot of times, what I'm talking about in terms of support and resistance is purely a technical conversation, and yet there's times that I'll talk about things that are fundamentally going on as well in terms of economic news, right? And I'm going to try to show you why I feel like it's important to blend the two, and this is one of those contexts where that's really important for me to keep in mind that yes, really the only thing I can do in terms of being a trader is watch what's going on real time with price action. Doesn't matter why buyers are buying, why sellers are selling. I just need to know that they're doing it. But this is what I'm going to talk about today is going to put that into perspective about why sometimes in terms of a larger view, or I shouldn't say larger, I should say a more well-rounded view of what it means in this entire, kind of trading tradosphere that we that we exist in as traders, why it's important to kind of understand the balance between the two ideas. So let's talk about this euro dollar. We're looking at the daily chart here. If we were to zoom out and move all of this over, we can see that, we all traded this, right? That the euro dollar had a really strong run for a really long time. The Eurozone was one of the last to kind of be hit by this global recession that happened. Not really even the last. I guess it just seemed like the least worrisome, right? When you're talking about, all of these economies tanking, it was the least tanking at the time, right? And things started to taper off, right? As discussions started to happen, as measures started to be taken and considered and then taken again, things started to kind of level off in here, and everybody wasn't quite sure what was going on. Well, then we just had, one horrible thing after another come out of the Eurozone, and then everything tanked. Okay, that's the long and the short of it, right? From a technical standpoint, I'm going to show you one of the things I start to look for in terms of, how do I know when, from a technical standpoint only, things are starting to look like they might turn around? How do you know that this is going to be, this is going to be the last tired out move instead of this double top in here, right? How do we know that? Well, we never really know for sure, but from a technical standpoint only, let's talk about what we can do. These are really hard to identify. Picking tops and bottoms are really difficult to identify when they're going on. But we do have the advantage, even way down here, even we're talking months later, we do have the advantage of retrospect and being able to make sense of what's going on with this price action. I'm going to show you a little trick that I use that kind of tells me things are tiring out. I call it 3 times extended. On shorter time frames, I'll actually do this away from a really price-absorbing 800 simple moving average, but you really don't even need that on your chart. You can really identify these areas pretty simply on any time frame without any indicators. So what we got here was a steady move upward out of this consolidation area, right? We had this little double top. Everybody was talking about it. Is the euro done? We're having this double top. There was one more drive to the upside. What this makes then is an irregular consolidation pattern. And I bet if I had some kind of oscillator pick a favorite, we might have even seen some divergence or something in there, even being as long-term as the daily chart. But it doesn't really matter because what I'm starting to see here is irregularity, right? The market stopped behaving the way that it normally does once it's picked a direction. And we're talking about a very steady eddy pair. The euro dollar just does not move impulsively. It so rarely happens that when you get little fake outs like this, it raises an eyebrow, right? It makes you stand up and pay attention to what's going on with the price. This becomes irregular. This is my first sign that things are ready to turn around. What we have now in terms of retrospect, and actually, you know what? I'm going to get rid of all of these support and resistance zones. We'll put them back on in the course of the conversation, I'm sure. Let's just take a look at price here. I'm going to grab this larger consolidation area in here. And I'm going to say if the market was willing to move that far, or this far within the range of its indecision, then generally speaking, it's willing to move 100% of that range once it moves outside of that range of indecision. That it usually becomes my profit target once I see a break outside of a consolidation. This is just these fibs are just normal old fibs. There's nothing fancy about them, and it's just a real easy cheater way that I have to measure 100% extension. So this is my 200% fib level, which is just this range doubled down, right? Which is a mirrored down for me so I can see that area. Now, if I was just looking, at the time of the breakout, and I didn't have the benefit of the support and resistance zone, what I like to do is take a look. Okay, I start with that 200% zone, or 200% price line, and then I like to ask myself what makes sense in terms of support and resistance, because I'm not a fib trader, I'm a support and resistance trader, right? I've said to myself the market typically is willing to move the full length of the range of indecision. However, I know that there are levels in here, supply and demand levels, that are used by this pair, by market makers with big money, and I want to respect those first and foremost. Tighten those up, and that becomes my profit target. What we see here, again, we're talking retrospect. It seems really easy when we're talking historically, right? But I'll get to the part where we get to put a plan together for what's coming up in terms of our own trading. So now we get to, get in our little time machine and move forward. What has happened is this has actually come down. It's not only hit the profit target, it did hit the 200% extension level. What's typical for most crosses, except the dollar loonie, is that you will get a consolidation range, usually between that 161.8 and the 200. This actually consolidated all the way up to that 138.2. That's okay. And that's, again, those of you who have been coming to these with me and trading with this for a while, we talked about this little pop-up here. We actually found a way to use our analysis in retrospect in this larger context to help us take a trade out of our next consolidation level. Do you remember that? Worked out really nicely. But at any rate, this was the consolidation level that it chose this time, right? If we're willing to say that the market is going to have that be its range of indecision, then that's the range I'm going to trade. And you'll find when you start to look at this that the ranges do tighten up. We go from larger to a medium size to a smaller size. This one came through, except for this little pullback, hit it quite cleanly right in here, that 200% extension level. I think I'm fairly sure my profit target was a little bit tighter, just a little more conservative. You can see here what it didn't do this time is consolidate up above that 200% extension level, right? What we are getting now, though, you can see this area of indecision, this larger area of indecision. What we did get, and this was that little wick was our pop-up out of that consolidation area. We did take advantage of that. Let me grab it. Now I can't grab it. We did have a chance to take advantage of even one more move. That's the 3 times extended. This pair, from a technical standpoint, should be very, very tired. That's when I expect to start seeing irregular consolidations. And that's what we've started to get. Look at the wicks and shadows, the tiny little bodies. The market just wasn't sure it was time for a pullback. And then you couple that with headlines flashed across all the economic newspapers, the entire market short the euro dollar, blah, blah, blah. Your contrarian traders are coming in and they're going to drive that price up because once it hits the newspapers, man, you're just about out of sellers, right? Your sellers are going to see that and go, okay, if everybody's short, I better take some profit because there's about time that people are going to be reevaluating their positions and taking those off. So you see profit taking, you see contrarian traders come in and take advantage of that indecision. And that creates all of these irregular patterns that can signal the end of the trend. Now, I'm not picking a bottom. I don't think the euro dollar is done going south. What I want to talk to you about next, though, is the reason I think that and why it's important for me as a trader to balance my technical analysis with a fundamental understanding. I know I'm kind of beating this to death, but I hope I'm kind of making sense here as well and giving some tools that you can use as traders. So what we're talking about here, make these candles look like candles, what we're talking about here is while we're in this area of indecision, we're getting an irregular consolidation pattern. What makes sense to me to do, even though I have a fundamental bias to the short side, what makes sense to me to do is almost let this longer term consolidation, this really dumped rather quickly. And now it really kind of went sideways for a while, even though the market was, all of the news was saying short, short, short. The market really said, not so sure. That pause in there is kind of the resetting of the game that I'm willing to consider because I hold this bias from a fundamental standpoint to the short side. Okay? I hope what I just said didn't sound like a whole bunch of double talk. So what I'm saying is with this irregular consolidation, I'm willing to let this be kind of a new chance for me to look for a second series of 3 times extended. So overall, it makes sense to me that if the market is willing to have this range of indecision, actually I'm going to cut that shadow off and then put my line back on and we'll zoom out, we'll find out where that is support and resistance wise. But if the market is willing to let this be its area, its range of indecision, typically speaking, if it breaks out, it's going to break out, it's going to move 100% of that range of indecision because that's where that's the breadth of the movement that the market is willing to make, right? Let's go to the weekly chart. Just make sure that makes sense support and resistance wise. And typical Triffany, I'm going to go ahead and tighten that up. I'm splitting the difference kind of between these shadows and these bodies. And I just like that a little bit better. I usually do go a little more conservative. In trending conditions and with more volatile pairs like a yen cross or something like that, I'm willing to go outside that 200%. But generally speaking, I want to kind of stay a little bit inside of it. Okay, so bias to the downside, blah, blah, blah. What does that mean for us right now? Do we have to wait for a close below that? Well, let me tell you what I did this morning. Or actually, starting Sunday, started putting my plan together. I knew what was going on in here from a fundamental standpoint. I knew it was time for the pair to take a pause. Now, I have not forgotten the areas that have been left abruptly and not retested. These are all still important. I talk about them every week. If you've been with me a while, you're probably sick of hearing me talk about it. These are going to be important levels when the market does turn around. There's no reason for it to turn around right now. Unfortunately for the Eurozone, there's just too many other things that are just primed and ready to hit the world news. Even as this Greece issue subsides, I think there's more information coming out of Spain and Portugal. Germany numbers are starting to taper off a little bit. We're starting to see kind of a loosening and those Germany production numbers that keeps that easy so strong. So unfortunately, it's not like I'm rooting for it to happen, but from a fundamental standpoint, it seems likely that the euro has farther to go south. And it's going to be really difficult to stop that southward momentum and pull it upward. Okay. So come the, and you know what else I had on here? In my analysis, I had a trend line. Doesn't seem really important, but that's what I had on there. Okay. So what we had here during this area of indecision, and this whipsaw action, this whipsaw behavior becomes much more evident on the 4-hour chart when we see lots of indecision. We see conviction to the buy side and then quickly conviction to the sell side. Conviction to the buy side, conviction. I mean, when both sides are that sure of themselves, that's when you get these irregular consolidation patterns. The trend side is just losing its predictability, right? It's losing its patterns, its normal behavior, and that becomes really a good indication that the trend side is just tired. That doesn't mean it's over. It means it's tired. So seeing that I got one break, remember we talked about that pop-up behavior that the euro dollar has been doing, right? Pop up and then go south. Pop up and then go south. Pop up. So what was I watching for? I mean, all we're talking about is big money taking profit. We are seeing, when news hits a headline, contrarian traders come in and grab some of those reversal pips as the market kind of wants to stabilize itself again. And I have a really good level of support and resistance now to watch for the next kind of definitive move, even though I'm still in this overall area of indecision, aren't I? Nothing's really broken for sure. And we're still kind of, and let me highlight it, it'll be easier to see. That's our area of indecision right now, right? I'm still inside of that. So I take a little bit of a risk by staying inside of this whipsawing, goofing around type area. Yeah, I did. But I am still making lower highs, and I am still making lower lows. So I still have the daily trend in my favor, the 4-hour trend in my favor, and certainly overall sentiment in my favor. So making sense of this in here. Now, what was a possibility, not from a fundamental standpoint, but from a technical standpoint. After we have this downtrend, right? We have an area of indecision. We've got lots of whipsawing behavior. We actually even right in here have a blip downward into a support zone here. A knee-jerk reaction below that support level with almost immediate turnaround. Lots of pushing and pulling, lots of tug-of-war between buyers and sellers in here. And then another hit of this same support level right in here. Wasn't it possible that this could have been a very short-term, upside-down, head and shoulders type play that could have probably taken us near the top of that box? Let's measure that shoulder and see where that would have taken us. You would take the most recent price action. If you're in equities, you're going, you take the head. Well, if you're in Forex, trust me, you take the shoulder. So yeah, it would have almost taken us to that secondary high in there. So that was a possibility, right? From a fundamental standpoint. When you look at that economic calendar and you see all of the dreaded news coming out of the Eurozone over last night, this morning, coming up tonight, it'll be my nighttime. If you're in the Eurozone, it'll be tomorrow morning for you. But when you look at that and you start to see that and you see, is there really a reason for the market to sell? That upside, that reversal becomes even trickier, especially the shorter term time frame you go. So I want to mention it because it was possible, right? It was very possible that could have at least been almost a retracement measure in here. But that's not what triggered. It's just not. Oh, actually, look, it did trigger. On the 1-hour chart, it triggered, but remember, we've been talking about this euro dollar having that pop-up behavior and then movement downward. I was sleeping right here. This was before I woke up this morning. But what I did have a chance to do, and this is what I want to impress upon you as traders, there is such a sense of urgency when you're learning how to trade, especially when you really feel like you're honing in, you're getting a good feel for your answers, you have a really good idea how you want to trade, and you start doing the math. And you say, wow, if I can get this kind of success off of trading like this on one pair, what if I do 5? What if I do 10? You're right? And you get really excited, and then you feel like you can't sleep. You can't go grocery shopping. You can't spend time with your family because you might miss a trade. And then if you are in a trade, you have to stare at it and look at every, possible pip movement and all of that. I sleep like a baby. Did I expect that the euro dollar was going to dump by the time I woke up this morning? Yes. I did expect that. The pound yen too. Actually, last night I almost just because I really wanted to, not because there was really any technical reason to, I almost wanted to just put a sell position on that pound yen, but I didn't because it doesn't follow my plan and it's not being disciplined and all of that. I have to admit to you that I do have those desires. There are times I'm like, I just feel it. I just want to put a trade on. But, it takes a lot of presence to be disciplined enough to go, no, that's not in your trading plan, and it wasn't, so I didn't. But what I'm trying to say here is I missed these, but what I did get was this pull back up and a retest in here. And about halfway through the hour, I saw a wick on here. And momentum start to pick up to the sell side of that trade. So I went ahead and got in there. That was retested enough for me, and I think actually my support line was up here. So it just tapped it and was starting to move away. Why is the half-hour mark important? Because generally speaking, when momentum starts to pick up, what has happened in the first half hour is the sellers, in this case, of the previous hour are taking some profit in the first 15 to 20 minutes, taking some profit, pulling that price back to affordable levels again before getting in again in the direction that they really want to go. So I actually feel more confident if the first 15 to 20 minutes of the next candle after I enter a trade goes against me. If that makes, people wrap your head around that, right? Wait, you want it to go against you? It actually tells me that there's people that are in there driving that price, just retesting those levels before driving the price back in the direction that I want it to go. And certainly that's what happened in here. So if you're not in this trade already, don't go jumping in. My profit target is this secondary low. I got it from grabbing this range. Oh, look, I almost hit the bottom of that box exactly. I got it from grabbing this range, most recent price action, right? Putting my my profit target on the 200% extension level and didn't really have to make much of a move here. And I believe I'm at 35.10. I went above the round number by a little bit, right? Because those round numbers are psychological numbers. So that is kind of taking the overlap, right? Not only overlap in time frame from the daily to the 4-hour to the 1-hour chart, but overlapping a fundamental understanding of what's going on. If you're pulled out all the way to the daily chart and you're looking at this price action, you're going, what the Fed is going on in here? What is this price action all about? But you understand that it has been so driven with such conviction for too long, then you're going to expect things to start looking a little tired. You're going to expect things to start looking a little confused. It's a resetting of the game. It's the market kind of going, hold on a second. Our selling action has hit major news. Let's just pause for a while, make sure that, anybody who wants to be out of this trade is out of it before we get back in. Because they don't want to get caught up in a major sentiment change either, right? They don't want to do that. And as news hits and everybody knows about it, you've practically run out of sellers anyway. Time for the buyers to start stepping in. And that's going to create some confusion and price action. When you understand we can overlap price context, the candles, right? The larger time frame with an understanding of the fundamentals, then things just kind of start to mesh. That's kind of getting the feel for the marketplace. Now, this 3 times extended is a really neat trick, and I'll tell you, if you test it on any time frame, I guarantee you'll start to make sense of it. You'll start to identify, oh, things are starting to get tired. Maybe you don't risk as much money on your next trend side trade. Maybe you're willing to just wait for things to kind of bobble around a little bit before you get excited about your trend side trade, right? That's when it's time to start not changing your trading system, but adjusting how you trade it to protect your profit. Buko Joe says, I'm long from 138. So, again, a counter-trend trader. And Buko Joe, as long as you haven't risked much and you're willing to sit on significant drawdown, I don't think that looking outside of, this area of indecision for a long possibility is outside the realm of reason. I think it makes sense. we have a lot of areas in here that have not been retested. They did not get retouched. I mean, there's major ones like you see on here, but you can identify even more on a 4-hour chart. So there's been a lot of impulsive movement, and these impulsive places, they do get, once the market turns that sentiment back around, they do get retouched. They do get hit with excitement once those come around. It's just one micro lot. Perfect. Oh, yay. I love to hear you guys say micro lots. Oh, let me tell you, even if you have a big account, if you're new at this, you should be trading micro lots. Yes? Please tell me you all are trading micro lots. There's no, even if, I don't care if you have the money to blow. You have lessons to learn. Do not put a lot of risk on the table. Do not, and you know, if you're past your back testing and you're past your paper trading and you're starting with real money, make it tiny amounts of real money. Get the feel for what that feels like to have your money on the line, because it's a totally different feeling than just your testing and just your paper trading and just your analysis. And that emotion comes into play, and that's when things get really, really dicey. So yay! I know you were just sharing a little bit of information there, Bukoja, but you made me happy. That when people say they're not risking a lot, and when they say they're back testing, I'm like, yay! I have done my job. I feel like I've, fulfilled some greater purpose in the world. I don't know. It's just, it makes me crazy. I don't know if anybody overseas is having advertisements on the television about their brokers and stuff. We just recently, like in the last year, had FX brokers come on. They go, yeah, you can paper trade till you get it figured out, and then it's easy to make trades. Da, 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 da. I want to just throw a brick at the screen. Like, you don't tell people this is easy. It's not. It's a very interesting journey that people take on when they decide to become traders, even if they just want to trade in their spare time for a little bit of extra cash, right? This isn't simple, and it's really revealing. It tells a lot about a person's character, about who you are. You might surprise yourself about the things that you thought were strengths end up being weaknesses, and vice versa. And so you can't just come in this and just start throwing money in the market. And so, yeah, you made my day. Yay! Back testing and micro lots. Woohoo! Yay! So yeah, exactly. Especially at first. Yes, exactly, Hartley. You can always risk more and stack into your trade, and learn how to be better with your money management. But it all takes time. Jerry says, I have no visual, but looking at the daily, it looks like there's more than 3 down. Well, I guess it depends on where you see your consolidation areas and what you're seeing in terms of overall movement. The way that I measure my consolidation areas, I certainly see 3. But, if you were looking at this, if you were pulled way back and looking at this 4-hour chart, you might see more than 3, right? But let me show you something that's really interesting. So let's say you saw this is 1, this is 2. On a 4-hour chart, you would probably see this as another 1, this as another 1, right? And that might be what Jerry's talking about, what he's seeing in terms of what he sees on his screen. Again, it really does depend on your time frame. But what's interesting, and this is so great, and this is the reason why it works on all different time frames, is go to that 4-hour chart. Let's pull back, see if we can get some. Okay, take the auto scroll off of your screen. I do that every time. Okay, so let's say you weren't looking at this overall consolidation. You said, you know what? This got goofy, right? This became an irregular consolidation pattern. We had everything go sideways, a pop up, and then a move down. And that could feel like, on a 4-hour chart, a resetting of the game. So that becomes your first over consolidation area, right? And then you go, okay, it hit that 200% level. And this became the second. Oops, not there. There. And then you go, okay, hit that consolidation level. This became the third. And actually, we actually ended up really taking the same measurements we just did. so really, technically, this last one would have triggered and then not hit the 200% yet, but you're starting to see that irregular consolidation again, right? What's interesting is that no matter the time frame, when you start with kind of your larger area of indecision, and that actually didn't end up being a really good example of that, but it really does work out that most of the time you can really find places where it'll do that once, twice, and then that third time just starts to get a little bit goofy. And that's your chance to step away from the market, let things kind of hash themselves out again, and then come back in. It works on a 5-minute chart, works on a 30-minute chart, it works on every chart I've ever used it on, ever. It's actually a really great tool. It does work not just, in the context we're talking about here, I'm actually saying that after this consolidation area, I'm looking for it to continue the trend side, right? But it does work counter trend as well, because isn't it true that at some point all of these pushes and pulls? Oh, actually, I wanted the 4. Oh, now my auto scrolls. Okay. At some point, all of these, let's say we're talking about a 5-minute chart. This little pullback in here, right? This had to have a trigger of some kind. And on a 5-minute chart, you're going to see enthusiasm, 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 and then indecision, and a break outside that box would have taken you long, right? Here we got long wicks and shadows. Indecision is going to take you short. So it works both directions. The idea is you're saying, if this is where the market is pausing, if this is where it's unsure, I don't want to be full of sureness, right? I don't want to be so sure of myself that I dive in before the market's sure of itself. And then you can take that the other direction. What if this hits? I'd be surprised from a fundamental standpoint, but what if this hits this secondary low, right, at, say, 35 or so, and comes right back up and bounces off of this? What if this becomes almost like a 1, 2, like a triple bottom kind of behavior and completely reverses? Does that negate anything we've talked about in here? We're just saying this is an area of indecision. If it breaks outside of that area of indecision, isn't that saying that the market is now no longer undecided, right? So you have a chance to kind of break these down to their smaller elements and make decisions off of those smaller areas. So, excellent. Any other questions? I love when you guys ask questions. I really do. It's funny because I think it makes me, you'd be surprised how your questions will stick with me. I'll think about them. Like 2-3 weeks ago, they seemed really confounded that I didn't have indicators on my chart. They kept asking me, how do you measure momentum? I'm like, well, you just see it in the price. I didn't really have any way to kind of explain that. And it really made me kind of focus in and redirect my attention to, well, Triffany, how do you identify momentum? If you're not using oscillators, you're not using indicators and all of that, it makes me a better trader when you're involved in the process. So you don't ever feel like, you can't ask questions here or be involved. Almost a decade, Buko Joe. That's been a long time. Oh, I'm glad you're here. Thanks. I'm a newbie. Could you go over entries on lower time frames, say 1 minute if you use it? I don't use a 1-minute time frame, but I know it works on the 5 minutes. So let's do that. So Nick is saying if the euro breaks down 34.50 area, then we're in for the next leg of down. Okay, let's look at that. Let's say, yeah, that's a great question. That's a fantastic question. Where to next, right? Oh, we were going to identify that, weren't we? Okay, so on the daily chart, and these are big profit targets, right? Generally speaking, because I trade the 1-hour chart, I have like an overall goal, in this case, right around 32, and I'll move to, did we already move to the weekly chart and identify? Yes, we did. Okay, so right around 32 is going to be my overall goal, okay? What I like to do, though, is generally speaking, what will happen during the setup of the trade going southward. So 32 is my answer. That's my quick, short answer to Nick. But generally speaking, what will happen is we'll get, if this does break this pretty solid psychological number. I mean, look at that. I mean, it's been strong support and resistance on both sides for, going way back, right? Right in here, right in here, right in here. I mean, that 35 is pretty tough support to break with any measure of enthusiasm. So what I'll usually get a chance to do is once that level breaks, that indecision will start to come in, right? The sellers will draw that price down, then take some profit, wait to see who else is on board, and then drive it down again. And then once they're absolutely sure, once they're convinced that the market is holding on to that directional trade for a long time, then it becomes a matter of pulling it back, making the trade affordable again, and then driving the price down again, pulling it back, making it affordable again. So at each one of those areas, Nick, what I get in between there are smaller areas of indecision on my 4-hour and on my 1-hour chart that will allow me to take this longer term trade down to 32 in shorter spurts. So what we have here is, kind of in this dip below is a muddy area. And I'm willing to bet that once the market breaks that support again, that's going to be the area that it comes back up to and bounces and maybe even triangulates. Because after, Tuesday, after tomorrow, there's no more real major Eurozone news coming out. And in fact, I think Thursday there's actually potentially some positive, not much, but some positive news that might give the euro pause, right? So that's going to give me a fresh area of indecision. I get to mark that area again, wherever that's going to end up being, and I get to find an interim profit target along the way that doesn't make me hold on to the trade for quite so long. See how those 100% levels work? They work pretty well, right? So it'll look something like that. And I'm willing to take that larger move in smaller chunks because, look, I could be wrong. And I don't want to get tied up and married to my trade and wholly invested in my trade and have so much on the trade that I feel like I have to dig my heels in. I could be wrong, and it could go against me. And I would rather, along the way, be able to take profit, put some money in the bank, take profit, put some money in the bank. Try to take profit. Oops, I was wrong, but now I only lost a little instead of a lot, right? Kelly asked, Triff, do I think this works on a 1-minute chart or shorter? Yes. Let me tell you, the shorter time frame you get and looking at this kind of breakout style trading, it does get tricky. The characteristics of taking the trade gets a little bit trickier because very often what happens when you wait for that the absolute close of a candle, very often that was the move, right? Same thing with using candlesticks on a really short time frame, like a 1-minute or even a 5-minute chart. Very often when you wait for that confirmation candle of the hammer, that confirmation candle was the move, right? So there, you do have to play with it. You do have to test it and kind of get a feel, the nuance of trading such a short time frame. But absolutely, it works. Nico says, on the range market, how do you use it? I'm not sure I understand your question, Nico. Go ahead and ask again, and give me some clarity so I can help out there. Let's see. This was a continuation of Hardy's question. Could you go over entries on lower time frames, say 1 minute if you use it, like your euro-dollar re-entry short? Yes, let's do that. We'll do that right now. Okay. Like the Kiwi on the rig. Oh, yes. Okay. Because I said we'd do it. Oh gosh, we're running out of time. Come back. Come back next week. Let me do this euro-dollar thing really quick. Let's say, on the 1 minute chart, let's highlight these levels. Now we're talking on a 1 minute chart. We're saying that we're going to make our analysis on a 5 minute and then a 15 minute chart, right? But even here on this, let me get rid of this so we can see what's going on. Even as far out as a 1 hour chart, we can see these ranges, right? We can identify within these areas significant support and resistance levels. So that's where we can always start with saying overall, where is the market fearful and where is the market confident? Right? I'm just throwing some levels on here so that when we drill down to that smaller time frame, we can make sense of it. And then because we're going to be going down to a 1 minute chart, I'm going to put in this tiny little mark right in here. See this old support and resistance level? That doesn't look important on a 1 hour chart, but it will on a 5 minute. Okay, so let's start at our 15-minute chart. Let's say we saw all of this enthusiasm. We say, oh my gosh, it's a lot of selling. It's entirely possible that 3650 gets retested. We want to keep that in mind. We do not want to discount that possibility, right? Because the market is, by nature self-correcting. So we don't want to forget that. So we identify this area here. And now, I don't know why I put all these levels in the way of the top. I can't help myself. Support and resistance, I'm addicted. I can't help it. Okay, so we identify that we had impulsive moves. This is a 15-minute chart, but we're starting to see some tiring out. A hammer, a spinning top, another hammer. Okay, is this candle going to be a reversal? Let's see. On the 5-minute chart, we're starting to see that off of this behavior right in here, as it came back up and retested this this support level that we identified in here, right? We can see that there's still indecision. Now we get an area of indecision that we're willing to make decisions about. And you might have, taken this as a fake out, possibly to the long side, depending on where it was you started looking at the candles and where it was that started to make sense for a trade. But certainly on a 5-minute chart, you're talking about getting in, taking a quick loss, and as soon as it breaks below that, you've got, you've got your profit. So where'd my thingy go? Oh gosh, it's way back here. Take the scroll off. Oh, what did I do? Now I've really gummed up the works. Okay, scroll off. Now just gently move back here. So what we have here on our 1 minute chart, we have a breakout. It actually comes down to our next level of support and resistance. That might have been enough. If that was your profit target, you said, I'm just going to go for that next secondary support and resistance level, you might have gotten in and gotten out of that trade. But look at what happens. It comes up and actually retests this former support. It does it again. It gives you a whole nother shot at taking this. This candle right here is a very clear bounce off of the candle that hit that support level, and you could be in all over again. And watch what happens. Even if I were to take, of course, we know now in retrospect, I wouldn't have taken the largest. I wouldn't have gone extreme to extreme. I would have taken the most recent price action on this, especially on a 1 minute chart, the most recent price action as my profit target. And it hit it quite cleanly right in here. On the retest, it hit it again. This became the new area of indecision, right? It was really convinced all the way down to 35.60, came up, retested it. Again, I probably would not have taken the extremes, but done something like that. And that next move downward caught it pretty sharply. So it does work on that 1 minute chart. What becomes tricky is if you trade a 1 hour chart and that's where you make your decisions, don't go down to a 1 minute chart. Don't do it. You're going to start goofing with your head and you're going to start messing up your analysis. You're going to stop being patient and understanding your overall price action and what the market typically does with a pair, and you're going to get emotional about trading it. So just don't do that. How are we on time? 10:45. Are you guys kicking me out yet? Do I have a chance? Let's see. Nick says if you draw a channel in the 1 hour, then it seems like it usually will come down further. Yeah, if you like channel trading, that's fine. There are certain pairs that seem to respect, those downward channels better. Your yen pairs are really good with trend line type support and resistance. Your majors seem to like the horizontal much, much better. They seem to hold much better. Let's talk about that Kiwi, because now I have to remind myself of the question. Oh, okay. And actually, I think this is my chart with the stuff that I usually have on it. Here's the Kiwi, but I'm going to hit it quick. What you're looking at, this is that 800 simple moving average I told you about up here. This is just default level MACD settings. The only reason I have this on here, I do not have it on to predict squat. I don't use it in any way, shape, or form to try to predict any level of my trading. I'm a price action girl. But when I get to those areas of 3 times overextended, if I don't see a double bottom or head and shoulders or something to confirm a reversal off of that tiring of the trend, I like to see if I can spot divergence there. A loss in sentiment to the trend side. So that's it. Yeah, you're welcome, Kelly. I hope it's helpful. Okay, so here's the Kiwi, and this was a trade that was actually set up. I didn't take it because I wasn't watching the Kiwi, but it was on my watch list, so the people who got my watch list at the beginning of the week might have taken it and gotten good money off of it. But here's that tightening up, right? Here's our area of indecision. It just wasn't sure. Might have taken a fake out to the top and a quick loss, but certainly the breakout to the short side of this worked out quite nicely. At least to the bottom of the box, although I think it could get even further. Dave asks, if I trade on the 1-hour chart, do I then look for an entry on the 15-minute chart? No. No, I don't. But you could. And that would be going, from maybe a 4-hour to a 1-hour to a 30-minute chart, or a 1-hour to a 30-minute to a 15-minute chart. If you want to base where you get into and out of the trade, that needs to be your line in the sand. You need to be able to say, that's where I'm basing my ultimate decisions to get in or out. If you go shorter than that, you're going to be messing with your head. You're going to be whipsawing yourself in and out of trades, one loss after another, over and over again. Yeah, as a triple screen, my triple screen system is the daily 4-hour to 1-hour. That's mine. That's what I do. And I don't use a triple screen system like, I don't know if you've read a book recently about it or something. I'm not sure entirely where you got the terminology. I know what you're talking about. And what people will generally do is they'll have their long-term view, okay, it's in a downtrend, so I want to see my midterm view be in a downtrend, and then I'm willing to take a downtrend trade on the trade that I take. So that would be a technical triple screen system type trade. And people who trade that have those time frames up on their charts the entire time they trade. That's not exactly what I do, because I'm willing to take the counter trend trade if it's time for a pullback, if things are getting tired, blah, blah, blah. But that's kind of the right idea, right? That's kind of along the same line. Ed says, what is the significance of the 800 simple moving average? It is, for me, it acts as a home base for the pairs. When things get tired, it seems it's a really easy place for the price to get back to when the trend gets tired. Now, I don't use it as my line in the sand because it's a dynamic profit target. If I'm looking at a counter trend trade, a pullback on the 4-hour chart, I don't use that as my profit target because it moves. But I do like to find those big, heavy support and resistance zones around where that 800 is lining up to be, and I use those. So it's just more of a guideline for me when things start to get tired, as a place for price to get back to potentially. But again, it's still support and resistance for me. Always, always, always support and resistance. Anis says, don't you trade 15-minute charts to refine your entries? I like the daily and the 4-hour chart. The 1-hour definitive time frame for me is refining my entries, because I like that daily and 4-hour analysis. It just absorbs the volatility of the day, and you kind of get your end-of-day decision, what the market has done and what it hasn't done. So I know for a lot of people, the 1-hour actually seems like a big time frame. But for me, it is refining my time frame. Let's see. Don't you? Yes, Pipaholic. It is going to be archived today. It did get recorded today. And I'm sorry, my MACD looks different. I like the histogram. Maybe yours doesn't have the histogram. It's just default settings, though. There's nothing tricky on there. Yeah, you're welcome. What's the ideal stop loss and pips for a 1-hour to 4-hour to daily chart trading? There is no ideal pip-wise because depending on the pair and the amount of volatility in the market at the time, it really varies. I find my stops by 2 levels of minor support and resistance. So it's not really a number of pips. And let me warn you, if you're thinking to yourself, I can only afford to lose 30 pips, you better make sure that that 30 pips is on a time frame that makes sense from a support and resistance standpoint. Or you need to adjust your lot size. Remember we said micro lots at the beginning of this presentation. That's super, super, super important because one of the biggest mistakes I see people do is say, but I can only afford 30 pips. And so that's just always their stop loss. But if it doesn't make sense for that pair, if that pair has a tendency to come back and retouch, you could be whipsawed out of the trade right before it goes your direction over and over and over again. And it creates this slow, steady bleed on the account that is extremely painful. So if you're thinking stop loss in terms of pips, I would encourage you to change your mindset in terms of stop loss as compared to the system and what makes sense for what you're trading. Please reconsider that because you will just slowly but surely, a little bit, with smart money management, right? I'm only risking 1% or whatever that thing is. Even with smart money management, if you're creating that as your barrier, there's a slow, steady bleed to your account. How long do you hold your trades? Hours? Sometimes hours. My trades this morning have been hours, but I was euro yen short, euro dollar short, pound yen short, so they moved quickly. But I've held onto trades for weeks before they've gone my direction. So, yeah, you're so welcome, Anis. I'm so glad you asked. People don't really think about that. Yeah, sure. You're welcome. Oh, it's a simple moving average. Yeah. Yeah. Okay, so I am done. Thank you so much for being here. I love doing this. I love that you guys are here. I love that you ask questions. It makes it such a much better experience for me. I am here every Tuesday. I'm also at www.triffx.com. That's triffx.com. The blog is free. You can get my watch list every week. You can hear me blither on Mondays and Wednesdays. And you might even want to consider my trader development course where I work in small groups of people to identify your fears, your greed, all of these things, and give you tools to overcome them so that you can trade the best way for you to trade as opposed to trying to just learn the way somebody else trades. So consider all of that. Next session starts March 10th. Thanks, everybody. I appreciate that you're here. Please be good to yourselves, and I'll see you soon. Bye-bye.